The ETF industry has been busy disrupting the way investors access markets. Product providers sit on the front line of that innovation. Here, we get to hear their stories and learn what it takes to be an ETF disruptor. This is Wavemakers. Welcome to Wavemakers. I am Cynthia Murphy, Head of ETF Research at the ETF Think Tank. And today I have a phenomenal guest. I'm very excited to talk to Christian Cooper, who's a portfolio manager at Subversive ETFs. Welcome, Christian.
Thank you very much. I appreciate the time.
I'm excited to talk about Subversive because you guys have such a unique everything about yourselves. So, let's start to just give us a little bit of a broad overview of the firm. When you guys came into the scene, you registered as an RIA and then you got into ETFs. So give us a little bit the overview.
So Michael Auerbach started Subversive as a venture portfolio probably well over a decade now. So the Subversive capital side, the venture side is very distinct and separate from the ETF side. But about 2 years ago, we began thinking about what it would look like to launch an ETF practice that focuses on $1 trillion problems. And I'll probably keep saying that a lot as we talk about the individual silos. But, it is a very distinct and very different business as an ETF provider than the venture capital side. So it has been an interesting start and certainly an interesting platform to try to tell stories.
It's interesting because I'm curious about the actual approach and investment philosophy. Like if you go on your website, you describe as you guys are active managers that invest in quote unquote radical companies that are bold, that are daring and uninhibited. Those are your words in there. And I'm just curious, first of all, how do you measure boldness and inhibition in a business? And what does that mean in terms of how you guys approach solving these $1 trillion problems?
Well, we do have a lot of fertilizer holdings, and it is difficult to describe fertilizers as innovative or compelling. I think if you look, it's an interesting distinction. I would say that certainly applies more to the venture capital side as opposed to the ETF side, because when we think about ETFs, good stories don't necessarily make good trades. So we can think about a narrative, around food security or around metabolic health as we have, but you still have to trade within the context of those securities, right? So we're looking for those things that are making incredible discoveries or using AI in new and creative ways, or have, a real focus, I think, on cash flow. I think that has kind of been missed in the last several years. So we're really looking for companies who have the capacity to execute and generate cash flows based on those transformative ideas. The ETF business has 1,300 individual equity holdings at the moment. So it's a very broad net. But I think we are in this moment of transformation where we are shifting from a growth mindset to a value mindset, and trying to trade that within these silos has been challenging as well. But that is a very long-winded question, or answer to your question about how do we find these companies. But it's a lot of work. It's a lot of investigation.
Yeah, and if you look at the lineup, it's interesting that there's definitely a future lens to the ETFs you guys are bringing to the market. So you have 6 ETFs. Mental health, as you mentioned, food security, decarbonization, so energy transition, cannabis, which is kind of an interesting one. And then you have these new one, the congressional ones, Nancy and Cruz, they're investing as Congress does, which is a little bit outside what it looks like, some of these more thematic. So when you're looking for these really interesting names, what's the approach here to narrowing down the focus first, the actual theme you want to explore, to then go investigate what businesses need that? I mean, how do you actually build a lineup of ETFs, a family of ETFs?
Well, there's one thing with respect to Nancy and Cruz, those are, I don't see those as outside of the mindset of solving trillion-dollar problems. So we'll come back to why that's the case a little bit later, but it is casting a wide net. So when you think about food security, or when I think about food security, it is, we've had seed companies, we've had fertilizer companies, we've had water companies, we've had consumer-facing organic storefronts. I think the key theme is that we want to own that entire vertical, right? So within food security, it's a vertical of seeds, fertilizer, water, consumer-facing distribution, production, that whole cycle. If you think about the metabolic health space, which is our same vehicle, we have the co-manufacturers for the GLP-1 drugs. We have the needle manufacturers for the Dexcom devices, for example. There are Japanese companies who are doing some interesting development in this space. So I think owning the vertical is probably the only common theme among all six, with the exception of the congressional ETFs. And I think that's probably my core approach. What's the vertical look like? Who do I want to own within that vertical? And do I want to make sure that I'm owning cash or growth within that vertical, if that makes sense?
Yeah, so to clarify, by vertical, you actually mean like basically the entire value chain of this thing, right? So all the parts involved in that whole story.
Yep. So for example, KCAL may have fertilizer companies that I approach on a free cash flow to equity, low PE value investing lens. But there are, there's this one chain of stores that are, they have pricing power. It's not Whole Foods, but it's a competitor to Whole Foods, and they're much more expensive, right? On a valuation basis, right? So that is much more consumer facing growth focus within the same vertical of food security. So I think that is the challenge, knowing which lens to apply to which part of that chain, for sure.
Is it fair to say that on all your ETFs, there is a focus to go back to your free cash flow attention and the valuation points? You are looking for attractive value, and you are looking for some measure of quality because a lot of these themes are all somewhat disruptive, and we know what can happen with the disruptive themes. They can be very growth tilt and very risky and very volatile. Is that like a deliberate approach, or it just happens to work with for the companies that you're interested in?
It's very deliberate. Well, when we're thinking of launching an ETF theme, it's within, what is going to happen within the next 2 to 5 years that can drive the valuations within this space that we can trade it, right? So, my thinking around launching that theme was we were going to see a lot of the same things that we saw around the Arab Spring with respect to food security. If you look at the Ukrainian war in Europe, how that impacts fertilizer prices, nitrogen, the natural gas supply chain, all of these things add up to complex problems within these issues. And so KCAL is a perfect example of one of those themes that is trading very differently than what we saw a year ago. Right, I thought with the war in Ukraine that would break differently. Fertilizer has been one of the worst performing portions of that because of the decline in the input expense. But that's also an example of great stories don't also trade well. So it's still finding the tradable theme within these segments to generate returns, right? So VCAR being uranium focused right now is a prime example of that, right?
Yeah. Well, and it also reminds us that these themes, they are long-term themes. This isn't like a quick, short tactical play. And I think, in the thematic space, sometimes it gets lost. Themes take time to deliver their value.
Well, that's a good point with respect to Nancy and Cruz. So if you don't mind, let's talk a little bit about those congressional ETFs and why they're a little bit different. When I talk to other advisors, they say, listen, I don't talk politics to my customers. I don't care about politics. I'm going to avoid these like the plague. The reason that we we partnered with Unusual Whales to create the congressional ETFs as a statement about what should, Congress should not be doing this. But the reason we split them up is that one side, Nancy, is the growth version of that vehicle, and Cruz is the value version of that vehicle. Mm-hmm. So when we think about those funds, it's not about the politics. It's about the worldview that each side of the aisle has, and using kind of the wisdom of the crowd to guide that portfolio construction. So, and I think that is really important to understand, that we're not investing in politics, though we really want to try to communicate with Nancy and Cruz. It's not about politics. It's about alpha.
Yeah, well, what's also interesting about those two is that I almost think of them sometimes as an educational effort. To your point about, you partner with Unusual Whales because this is something Congress should not be doing. It's an interesting, almost flavor of impact investing, if you will. It's like you're bringing to the forefront something that we should be vocal about. But hey, you can actually capture alpha too while you're doing it. So the whole exercise is super interesting. And
I will speak for Unusual Whales. Well, I think Unusual Whales might be a little bit more optimistic about getting congressional trading banned than I am. I think that it's near zero. Congress will never do anything for the benefit of the American public. So I don't think it's just not gonna change. We would love it to change, but it's not gonna happen.
Yeah, well, the effort is appreciated. It's a very cool effort. So I'm curious about the process of actually deciding to launch ETFs. At what point did you guys sit there and say, how do we better deliver value to our investors? Did you go through a whole due diligence process of, all the options of investment vehicles, from mutual funds to interval funds, if you will? Or was that just a given that ETFs are going to be for you? What was that conversation like?
Active ETF is the closest thing you can get to a hedge fund in the publicly traded space, in my view, both in terms of cost and reach, right? So like you can reach a lot of people with an ETF that you can't with a hedge fund. So that was issue number one. Issue number two was really getting back to this $1 trillion problem idea. Let's take SANE, for example, our mental health fund. When you talk about mental health, people immediately think about depression. That is certainly part of SANE and many of the things that we invest in. That's not the whole story, though. If you take a population of 30-year-olds, let's say 2 million 30-year-olds from the age of 30, and you limit their glucose intake, there's a very particular number. Let's call it 5.8. Your A1C, your doctor probably talks to you about it once you get to a certain age. But if you can keep that population's A1C below that level, 98% of that population will be Alzheimer's free 40 years later. Okay. So what we're realizing is that the beta amyloid hypothesis of Alzheimer's treatment is wrong and misguided. The real root is metabolic disorders, right? So we are fixing the $1 trillion Alzheimer's problem that both India and China and the United States are confronting in a different way through metabolic assets. So in SANE, we own Dexcom, the glucose testing manufacturer. We own the GLP-1 manufacturers. We own the co-manufacturers of those drugs. So it's really the realization that the world is going to figure this out sooner or later. They haven't yet, but it is the only way that we're going to solve this $1 trillion problem, through solving the metabolic disorder first. That is a very long way of saying, how do you scope out any of these problems? That's something that that I personally have been just trying to figure out for a long time. So that was top of my mind. Food security was at top of my mind. Decarbonization, that is another $1 trillion problem that we have to get right. and get right quickly. So maybe it's just a personality quirk that I worry about everything, and maybe that's how these get launched. But it is an interesting way to think about these problems as a set of complex systems, as opposed to, just a stock that you pick.
Oh, it's what's really cool about this is that you are actually living the name of your firm. The concept of being subversive literally means appending the establishment, right? Disrupting status quo, and the way you guys are approaching investment solutions are by really going against the grain and disrupting. It's fascinating. Yeah, I'm assuming that's why you guys chose the name Subversive, which is, I would imagine, wasn't very easy to market to advisors, like, come be subversive with us, but there's some power to it too.
I think there's some power to it. That is definitely a creation of Michael Auerbach, the firm founder. And but no, I think it fits the tone of kind of what we're trying to do. But the rest of the world has to think about these problems in the same way as well, right? Like, these assets have to appreciate so that gets back to the great stories don't make great trades, right? Like kind of what's the next trade in the next month, for example. It's kind of like always what I'm thinking about. So it is difficult to balance that long-term narrative with the kind of the shorter term, what did you do for me today type of
expectation.
Expectation, exactly.
Mm-hmm. So I wanted to ask you about kind of lessons learned in the ETF business. I think it's fascinating that on the Subversive Capital Advisors website, when you look at the drop-down menu at the top, there's actually a name of a tag there called failures. And when you click on that, it links to the investments and one ETF that didn't work out. And so it was actually your first ETF, Punk, which was a metaverse ETF. It didn't work out. It closed. And it actually is kind of a surprising exercise in not only, to use your word, radical, but radical transparency. But the notion that, we learn a lot from mistakes. So, if you think about this effort of owning what didn't go right, what stands out to you from the ETF side of the business of some kind of lessons you guys have learned in the short time you've been in this industry?
No one really cares about what you're doing or thinking or saying 99% of the time. So I think that is the one thing starting out in the ETF space you have to really understand. No one really cares until you have like a 3-year track record. No one, they want audited 3-year returns. I've got 20 years in the business. Doesn't really matter. So the association and focus of having that 3-year return and call it $100 million under your belt before you're really considered, even existing, I think has been eye-opening. That was not something that I kind of expected in the ETF space, in the ETFs as a business, right? Which is, I presume you're asking about. So that would be lesson learned number 1. Number 2 is just trying to how to be more personally effective in time management and being deliberative at saying, I'm focusing on this thing right now for these many minutes, and then I'm doing this, and then this is getting done. We published a Substack recently where it was actually really interesting. It's about basically how you have to work around the clock. And we basically published a trade idea that started at 2 a.m. with a news story, and we went all the way through the day from me developing the quantitative model, and you can see how I developed the model in code using AI. You can see how the trades get placed, how they get executed, how the trade files show up, all of the operational mechanics from like literally start to finish during a day. And it's on our Substack. But I think that is the other element that just extraordinary amount of complexity in systems that it takes to get all of these themes, securities trades, delivery of the basket files, making sure your market makers know what they're trading. I mean, it has to be 100% correct every day. And I think operationally, that is something that I underestimated, the degree to which, you know, I sit here at night and count up, you know, the shares traded, or, you know, the present value of a total return swap that we have on. You know, it's like, you just have to do those things. There's nobody, you know, you just have to do them. That is the business. So those two things I think are probably the top of my mind.
Yeah, I guess the takeaway is that ETFs become a lifestyle very quickly
Yeah,
if you let them.
very true.
Christian, this has been a great conversation. As a final thought, you know, are you guys looking at the next theme? What's on your radar? What kind of stories are you brainstorming, or anything that we can look ahead to?
You know, it's kind of interesting to think about these new launches and how you have to think about them like 2 years ahead of time. That's another thing that I really think about. Like, what's the state of the world going to be like in 2 years? And, you know, do we need to launch this now, or wait, or pivot? So those are the things I'm thinking about every day.
Yeah, it's tough to be a visionary. Listen, thank you so much for coming. Congrats on the firm and all the success, and we'll keep watching what you guys disrupt next. It's been fun to watch.
I appreciate it. Thank you.